Good evening and welcome, everybody. We are joined live. You're joining us live. We're absolutely live for the first time on StreamYard, thanks to our partners, DPK. And if you don't know where you are joining us live for the Khula Growth Club sessions. And again, I'm joining you live from Cape Town, South Africa. It's just a little bit after 5 o'clock here this evening. And we're looking forward to an amazing session with you this evening. Tonight, the session is really about SME growth, and we're looking to help you be ready to raise the funding that you need to run your business. Tonight's session is called Funding Readiness for SMEs, and I'll be joined shortly by Bongi Wepeja from SM Tax, the CEO of Startup Services at SM Tax. Again, you should be live with us this evening on Facebook and YouTube. So please make sure that you make use of not only the Facebook comment section, but also the YouTube comment section. And that's where we'll look forward to engage with you. These Growth Club sessions are brought to you by Hyber and SM Tax, and we'll say something a little bit about them just now, shortly in our presentation. If you are following us on social media, it's quite simple. It's hashtag Khula Growth. And in this particular broadcast, you're more than welcome to send us tweets, questions to @Entrepreneur Traction or @official SM Tax. And remember to tag hashtag Khula Growth. The second thing important to remember is that this is a live broadcast this evening to YouTube and Facebook. So do feel free to make comments on the comment section, both on Facebook and on YouTube. And make sure that you tag hashtag Khula Growth. You're still welcome to send through your questions, and we'll receive them after the session. All questions and queries can be directed to webinars@smtax.co.za. And I'm excited to be here with this evening. We've got a very simple, short agenda, but ultimately a 90-minute jam-packed session with knowledge and exchange of some of the most important information that you need to know around how you can raise money for your business. We've now gone through our broadcast rules. The second thing we're going to do is just give you a little glimpse of our objectives and why we have these sessions live for you. We're also going to introduce you to a little bit about the introduction to the Khula Growth Club, thank our sponsors, get some insights from Bongi Wepeja, from the CEO of Startup Services at SM Tax, around how you can get your business ready for funding, especially with the help of SM Tax, who has over 18,000 database SMEs of databases that they have access to. So again, this is some of the most important information. I will then take over and be back. And with that, I'll be running a short masterclass for you on funding readiness for SMEs. And then we'll tell you a little bit more what comes next. So do stay tuned for the next 90 minutes, and hopefully you'll enjoy and have fun with us. Remember that hashtag Khula Growth. Why did we start these sessions, and what has been the key objective to drive these sessions forward for all SMEs? The first important thing we wanted to do was to convene for new possibilities. We wanted to see how we can support other SMEs grow through the uncertain time that we currently all are faced with. We also wanted to inspire fresh new ideas and new perspectives on how to help you get through and get it done with your business. And so far, we've done 3 amazing sessions of this week. We started off initially with Christoph Oosthuizen, really talking to us about the importance of vision and building a core focused future vision for your business. We then went into a session with an inspiring talk by Lelemba Piri, who's a venture capital fund principal here in South Africa, talking about her journey to becoming that very successful investment principal. And then last time we had a session with our legal eagle, Oyolelwa Sukunyane, talking us through some of the tips that she has for you as SMEs. And then all those videos can be found on the SM Tax YouTube channel, which again, you can go out and check it out. Part of the second reason why we started these sessions again was to create a peer support network. This is a grouping of what we want to see where SMEs and small business owners come together in supporting one another. And again, in doing this, we want to see the growth of the support that both SM Tax and Hyber can provide to you and your business. And again, we have a strong commitment to the economic participation of more people in this country. So this is a reason why we have taken this journey on. And hopefully, if Piers is with me, he's now ready to show us through the video that we've created around some of the reasons why we're doing this.
So my name is Abongile Zelenzele, and I'm in love with the concept of Khula Fridays. And the reason for this, I think, when I was introduced into it, you first listen and you try to understand what the concept and idea behind it. And I think one of the words they use at Khula is that it's a concept of Ubuntu. We grow together. It's all about a place where we're young professionals. We get in, we talk to other young professionals, and in that we get, shall we say, a atmosphere where we can share ideas without fear. By the way, many of us forget that when you are in business, there's always that fear. But meeting other young entrepreneurs and just sharing ideas and going together, for me, it's brilliant.
Thank you, sir.
Thank you for that, Abongile. And again, in case you're wondering what the Khula Growth Club is about, the Khula Growth Club is an entrepreneur community like no other. We are fully dedicated to small business and small business owners who are fully committed to their business and their personal business growth. We are also equally dedicated to their personal development, their knowledge exchange, and long-term success. And this is at the core of what we do. The community has been established as a member benefit community with a focus on tangible value creation, access to affordable business services, and non-partisan commitment to SME advocacy. Again, this is a community for you if you have a business. The business growth ultimately element of it is at the core of what we want to do. We want stories, again, that inspire, but also drive individual growth for each business. And again, we could be no prouder to do this and to do this with you on our side. And all these things, unfortunately, would not be possible without some very important partners and sponsors. And to this, I want to thank SM Tax, the tax accounting advisory service, which offers a tax and accounting digital service to you. I also want to thank our production team from DPK. Thank you guys for coming on board as partners. We're really excited with the journey that lies ahead along with you. And lastly, I want to thank my team at Hyber Group for the amazing support that they give me in getting to do what I do, which is make sure that we see entrepreneurial growth at its core. And then with that in mind, I want to now bring on Ubongiwe Peja, the CEO of Startup Services at SM Tax, and she's going to give us some key insights on how you can be ready with your business for funding going forward. Good evening. Welcome, Bongiwe. Welcome, Bongiwe. Hopefully you're there. Bongi?
Hi, Vu. Can you hear me now?
There's Bongi. Welcome, Bongi.
Thank you. Thank you, Dave. Thank you so much for the
Awesome.
lovely welcome. Very excited for our first live webinar as the Khula Growth Club. And as Vu has mentioned, I'm the Chief Executive of Startup Services at SM Tax. Tonight, I'd just like to take you through a little bit of a presentation and share with you what SM Tax is about. We are a market leader in digital tax accounting advisory solutions, but what really stands out is that we give our clients real-time insights for both short and long-term solutions. As much as we're a tax accounting and advisory business, we really focus on improving your business profitability. Tonight, Vu is going to be sharing a little bit more around funding readiness and investment readiness for SMMEs. And I thought I'd just share, Vu, with everyone that's joined online around some of the things we see at SM Tax that could be hurdles for entrepreneurs in the SMME market. The first is compliance. Most of our entrepreneurs don't realize the importance of compliance. You register your business on PC and you forget about it. But the truth is there's an annual compliance that you need to take care of to avoid your business being deregistered. There's also things like tax. And I know that a lot of entrepreneurs are scared of the tax man. They're scared of SARS in the South African context. But really, there's nothing to be scared of if you do have a partner like SM Tax who will ensure that your business is always investment ready, and secondly, compliant from a tax perspective, because these documents are often required when somebody wants to invest in your business. And then the last two are really in line with your financials, because remember, if somebody wants to invest in your business, they want to see whether there's potential for growth. Is there potential for me to get a return on investment if I were to invest in this business? And so it becomes very important for the SMME to have proper record keeping and also forecasting. Who would have thought that COVID-19 would be a pandemic that's upon us? And if you didn't forecast for different scenarios, COVID-19 could have had a real bad impact on your business. But if you did have certain forecasts and you saw whether if this risk were to happen, what would happen to my bottom line? And so these 4 factors are very important for SMMEs. And what we offer at SM Tax is finance support. And we believe that it can be easy and seamless. From as little as 250 Rand a month, we can help you on a monthly basis to ensure that all 4 factors that I shared just now are in order. And when an investor or an investment opportunity comes your way, then you're able then to take advantage of that. So I encourage you to visit our website, www.smtax.co.za, to find out more. When you land on that page, you can click on the button that shows you where you can get financial support for as little as 250 Rand a month. In terms of my contact details, you're welcome to also get in touch with me if there's any other aspect you'd like to discuss, whether it's in startup services or whether you are indeed in that growth trajectory and you've already started trading and you want to hear more about what we can offer at SM Tax. Vu, that's all I have to share tonight. People are welcome to take down my details. My email is bongiwe@smtax and my direct line is on the screen. Thank you.
Thanks for that, Bongi. Again, we've worked with SM Tax the past 2 years at Hyper, and again, it's nothing but a great team that again can take your accounting and your controls, your systems further. So thanks for that, Bongi. And again, we're gonna get ready to get on and get this thing done, because again, we've got about 60 minutes left of the session, and we want to make sure that we use that to make sure that we share as much knowledge around how each SME can be funding ready. And again, remember, you can send your comments on the comment section on Facebook or comment section on YouTube, depending where you are joining us tonight. So again, my session this evening is on funding readiness during lockdown. And I'm excited to be sharing a little bit of the knowledge that we've prepared as a team forever in terms of how you can be ready to get your business funded. In terms of the funding program, we're excited. I thank my team, Vivian, and the rest of the team at Hyper for having supported and preparing this presentation this evening. If you want to reach out and get a hold of anybody on our team, you're welcome to send an email to service@hypergroup.net. Again, somebody will be there to support you. Hyper itself in South Africa is a level 1 BEE company. We do very unique things. We're a social enterprise helping to scale good and beautiful solutions across Africa. This is our short agenda that we'll go through this evening. It's succinct, it's tight. There's a lot of information, content. So hopefully you get your pen and paper ready, and we're ready to kind of roll and get it done. The first thing I'm going to do is I'm going to talk you through the current environment of what we find ourselves. I think everybody knows right now that we are in a new world with new challenges and new kind of opportunities. I'm going to give you a slight glimpse in terms of what investors are doing and right now what they're thinking around what's going on with the current realities of the world. And we'll give you a quick glimpse around how you begin to start your startup and drive through to your scale up, and how you can focus your growth on growing and developing your business this way. We're going to take you through how to prepare a data room. Regardless of what company you run or what business you run, the function of a data room is not only about investment, it's also about those bids and tenders that I know many of you want to go and apply for. We'll do a quick recap on the types of funding that are available and share some resources on how you can build your business beyond this difficult COVID period. So again, if you ask me, Vu, what is going on with the world? I can tell you the world right now is very difficult. There's a couple of things going on. Just in case you didn't know, we're in the middle of a public health pandemic all across the world. Different countries, different communities are going through this very difficult period. That's not a secret for anybody. But the other thing that is currently going on is that we're in a difficult economic crunch. I think you guys in South Africa have experienced it. We have currently 5% business confidence in South Africa. This is a difficult and challenging time, especially if you're a small business, because you need some big businesses to do business with you. You need the government to do business with you. You need some other businesses to do business with you. But how can you get a business done when there's so little confidence in what's going on in our economy? And thirdly, in South Africa, as all of us know, there's a big challenge with corruption. So again, in this way, good money that is supposed to be spent on small businesses is being looted and being taken away from you and I. These are the realities of the environment that we live in. But again, this is not the end of the world. How we should be thinking about building our businesses is this is a unique opportunity for us to press a reset button and again to get the economy reshaped, remodeled so that we can build the economy further. In the past 3 weeks, I've certainly been part of many sessions. I'm sure like many of you who have tried to speak about how we can come out of the economy and go on to build the economy. We're all seeing the positivity of what's coming, and possibly the president tomorrow will tell us that the entire country has to move to level 2 in terms of the risk assessment. But again, we hold hope that the turnaround of the economy will change. In March of this year, our team did an evaluation of where we think this will end. And with that, we felt 23 months was going to be the reality around which this whole entire change environment would shift. And over a period of 12 weeks, we ran a program called Growing Through Uncertainty, GTU. Again, you can access the platform that we've created on our website. And with GTU, we looked at how you can overcome some of these unique challenges. And again, we all know suddenly moms have become not only parents, but again, teachers and working from home. So how do we overcome these ideas? Fathers have become teachers and working from home. How do we create this balance of creating out our businesses and then again, building on it? One of the things that you can do is focus on the frameworks of what already is being shared by Bongiwe around your compliance, but most importantly, get your business ready. Mind your business so that you are ready when things ease up. We've already said that already starting from as early as October of 2020, you'll start seeing a return, a slow progressive return to as normal as possible that we can get. By February of 2021, you'll see an uplift again of the economy as things begin to start normalizing once again. By the time we get to April, that's when we have our local elections as well, that we expect a little bit of a slight deviation. But from May 2021, we're going to be back running again. So this is a unique opportunity for every small business owner to reimagine your future. And that future better include something to do with digital, whether you are optimizing your operations, leveraging technology, or you are fully integrating your sales, truly run by the technology, or you're going all the way and you're moving your entire business over into a technology space. If you're an entrepreneur looking for investment, again, not only from the banks, but also from private money or from venture capitalists, you might want to hear this a little bit. The investment environment is naturally very strained at the moment. You have two sets of types of investors. You have those kind of investors that again have been hit hard by this particular pandemic. And the reality of this is that decision-making has slowed down. Money from investment has slightly slowed down a little bit. But at the same time, caution around uncertainty has also made investors very hesitant to bet on an uncertain future. So again, this is one type of investor. The other one is the one that's looking for opportunity. But this kind of investor, again, is very cognizant of the reality of what is going on in the world today. So they're not necessarily taking the bets that they usually would otherwise take. As a result, for the risk they take, They want to adjust the valuation, but they also at the same time want to get a discount on the deal. So they're working with these limits, but this is the money that's currently available. So if you want to understand how to get that investment ready, the best thing to do is to be prepared. There's no better option than preparation. And this is why we are here this evening. So again, in order to begin your journey from startup to scale up, you have to understand that first of all, startup is nothing but a phase of doing your business. If you're a young person in your 20s, starting your first business, please remember, a startup itself is not a business. A startup is merely a business in a startup phase. So again, we will go through what this means and how you can think about how you drive scale. Again, if you're looking for investment, whether it's from an investor, a private individual, or a venture capitalist, ultimately you need to show that you can grow and scale your business. So how do you move your business from a startup to a scale up? And this is what any investor, any banker, or any venture capitalist want to hear from you. Here's some tips. Most companies, I think people will comfortably know that in the first 2 years, in that first 24 months of their journey, those companies die. That period of challenging times is called the valley of death. That valley of death is a graveyard for most businesses. Part of the reason why we have the Khula Growth Club this time is that we want to make sure that more of you move beyond the valley of death. More of you get to understand how you build and grow your business, even in difficult markets, so that you can move that business forward beyond that valley of death. At the point where, again, you are making just enough money, but at the same time carrying your cost, that is called your break-even point. This is where, again, your business is basically washing its own face. Your processes, your systems, your business model, your customers are paying just enough of the cost to run and operate that business. From this point on, you've got nothing but growth to look forward to. In many respects, again, different types of money can be raised in different phases of these particular periods. So at the beginning of your journey, you're looking predominantly at angel investors. These are private people who have a little bit of money to invest into the beginning phases of your company. You're also looking at possibly some friends, some family who are maybe willing to support your dream. And again, believe it or not, many of your family members, many of your personal friends would happily support your vision, your dream. Let me give you a slight tip. There's a wonderful way of doing this. Imagine, for example, if you could have your friends and family support you through a stokvel. Let me just whisper that, through a stokvel, yes. But that's a story for another day, for another session, and very soon in the future. This particular period of funding is called seed capital. How many of you have actually raised seed capital? How many of you have taken the time to bring your friends, your network of friends, work colleagues, as you begin to shape and start a new business, bring them in and say, here's my vision. You guys know who I am. Help me build my dream. That is called seed capital. And in that, you are seeding your dream and your ideas. As you move forward, you have an early stage startup period. Like I said, everybody, startup is merely a phase of beginning a business. In a startup, the one key thing that you must remember that you are trying to build is that you're trying to discover what is a repeatable and scalable business model. What is a repeatable and scalable business model? This is the key of being in a startup. And along with this journey, you're working your way towards a product and market fit. So where the point where your product and your market make sense and your systems work alongside each other, that's when now you've built a scalable model. And in South Africa, one of the things that we have noted is that far too many small businesses are constantly trying to build their businesses in their small local environment. What we want to encourage you to start thinking about is the cluster of customers that you are able to get who are buying your product, who are transacting, who are seeing value. How much time do you spend talking to them to understand what they need and why they're buying the product? How much time do you then spend would they be willing to refer you to a friend in a different part of the of town, in a different part of the province, in a different part of the country? Would they be willing to tell them how great the product works for them? These are the lessons you begin to start reshaping and really start understanding how to scale and drive growth. Because the one constant is there are types of customers in many different parts of the country. So remember this tip as you move forward. In this particular space, you have different types of funding. This is where things like crowdfunding, we're going to talk a little bit about that shortly. Things like bank finance, complex, mezzanine, asset-based funding will come in. This is also where a lot of government programs are amazing at supporting. I know many of you will laugh at me because you think those IDCs, those NYDAs, those whatevers, they never give money, but believe it or not, they do. It's how ready and you are. It's how ready and how prepared you are. So we'll go through and give you some tips on how this is going to work. From here on, you then look to venture capital. A tip to everybody in South Africa: too many small entrepreneurs and young entrepreneurs are going to venture capitalists too early in their journey. Take your time, build a business, because you exchange value. The thing about equity in your company is that it's very easy to give away. It's very hard to back. And as your business grows, the value of that equity incrementally increases, and you want the right partners working the journey. Just to give you an idea, most venture capitalists know that they're going to work with you as a business between 4 to 9 years. 4 to 9 years. They know from day one whether or not are you the kind of company, are you the kind of product, the kind of founder that we can work with between 4 and 9 years before they make an exit and a return to their investors. Those of you who have true vision, those of you who have true ambition, an IPO is the ultimate achievement in business. So how do you build a business to a listing on the JSE, to a listing on the Altex, to a listing on the ZARX? And this has to be formed part of shaping your journey. In my personal experience, many companies in South Africa have taken between 9 to 15 years to achieve that objective. So as long as it's in your mind and you're working on that pattern of growth, you will achieve it. And good luck to you. The next presentation I want to make is what is currently available. What kind of funds do I need to be ready for, Vu? What kind of money ultimately is available? Please feel free to take screenshots of this. So again, this content now belongs to you. The knowledge we share on the Khula Growth Club is there for the people who are in and watching these sessions. Let me quickly go through it. We start off with the idea stage. If you remember, we spoke about friends and family. The one very interesting way of raising money as well in these early stages is competitions. There's plenty of people running competitions. Again, it's a nice way to get small money, easy money, and small that you otherwise wouldn't be able to afford to get into your business. Your own savings, there's nothing wrong with your own savings. Are you saving money? If you are in a corporate job today, but you have ambition to start a business, have you started saving? Do you have 6 months of savings? Just in case one day that opportunity for that comes through. By the way, many people are likely to lose their jobs during this tough period. And again, so sorry to hear that. But one of the questions I have, and one of the key lessons that you have, is are your savings going to be the opportunity for you to begin to start investing your true dreams? Think about that. Many businesses have been started with a bank credit card, revolving credit, business credit card. This again is a very easy but expensive way of starting a business. So again, you're more than welcome. If you've got access to that credit, use it responsibly. Use that bank money responsibly and use it sparingly, because it's very expensive to pay back, especially when you're not sure how your business is transacting. How are your customers buying your product when you don't have the product and market fit figured out? Many competitions, as I've explained, already offer non-financial support, and some government agencies like CEDA also equally offer non-financial support. These things, again, if you ask me personally, I can tell you it's never optimized. But if that's the only option you have, why not take the option? Take the time to prepare your business so that you are easily qualified. You don't need to beg anybody. You don't need to ask anybody for any favors. You prepare, submit, and follow the process. One of the books I would definitely recommend that you look out for is a book called Slicing Pie by my wonderful friend Mike Moyer, who's based in Canada. What this book will teach you is how do you take your business, in this case is represented by a pie, and create slices of your business to bring and attract the best talent to support you. Anyone who's ever worked with me knows that one of the key beliefs that I have is that each business owner must have others. Each business owner must build a team. I don't personally believe in self-made people. Okay, there is no self-made business. There's a business that's built by a team of people that come together. At the beginning of your journey, some of the challenges you face is understanding how it is that you can attract the best talent to help you build your dream. Slicing Pie is a book you must read. It also should be available on free ebook online. Understand that when you bring people into your business, how do you create slices and incentivize them for their skills, for their time, networks, and for their money, especially in the early stages of your business. And lastly, in the early stages, also something called sweat capital. Sweat capital is the time you and your founding team put in to get you to build that business. How many people have you asked to join you on your journey, to your vision, and invest sweat capital with you? And if you are raising money, how are you calculating the investment of sweat capital before you approach a venture capitalist? The months that you invest in building that company is not free. It counts for something. And it's important that you recognize the value of that particular amount. And any venture with their pocket or their wallet will recognize your sweat capital, because in the day, for investors, it is a motivated and growing team. In the early stages of your company, this is a period between 6 and 18 months. Competitions are great. There's many accelerators, not only in South Africa, but across the world, that are happy to take brilliant ideas, work with brilliant companies to support them. There's angel networks and angel groups. But you know what? One of the favorite things that, besides sweat capital, the best way to fund your business is with your clients. Corporate contracts. If you can identify a big name company that is looking for your services, there's an opportunity for you to leverage that contract to begin to start funding your growth of your business. Later stages, we can look at things like crowdfunding, corporate venture capital, micro VC. Micro VC is the difference is the size of the investment. So in the stages of a company, companies don't necessarily always need millions and millions of rands to get running. Sometimes even a small check of 100,000 can do a great deal to support the growth of a company, especially if that check comes from the right partner. So micro VC is very important. This particular trend of micro VC is growing exponentially in countries like Ghana and Nigeria. I'm yet to see micro VC accelerated in the way that it's growing in those countries. But I know that there's a few funds in South Africa that are starting to think about coming in earlier and providing a micro VC or a smaller check size to enable small businesses. If you are seeing DFI or then late startup, DFI means development funding institutions. Okay, the development funding institutions are government institutions that you and I know: the NEF, the IDC, the NYDA, the PIC. These are all government agencies that support your funding. And again, there's so many of them in South Africa. And by the way, South Africa is incredibly blessed to have FIs and to have our government support. We just wished it was less corrupt. We just wished it was more transparent, more open. But changes are there for all of us. It's just about being ready, and we'll get into the details of how you can prepare yourself for those particular opportunities. As we move your business further and further into growth, at this particular point, you've hit the break-even point. You're now looking to drive accelerated growth in your business. So as we get to this point, this is called acceleration. Again, many programs exist that seek to drive acceleration. I know that for many people in the industry, different types of industries. But what's important for everybody to know is that our government, through its Small Enterprise Development Agency, SEDA, is supporting some 60 of these innovation hub communities across different sectors. Not only IT, they support furniture making, biotechnology, chemicals, a very diverse range of different types of innovation hubs that are there designed to support the growth of industries. Still, with acceleration, you can look at microventure. You can, again, the one very interesting one, which is not a tool that is used as frequently as it should, and I believe is a tool that should be used far more frequently in South Africa, is a convertible note. What does a convertible note mean? It means basically someone makes you effectively a loan. It's a favorable loan. That loan is written in very simplistic language, one page, two-page language, but at the time, that loan can convert to equity if you should fail to refund the portion as well as the capital amount. What this means is basically is that when you ask VU for a loan, I can issue a convertible note. We both sign a commitment agreement, and we have a timetable to which we're going to pay back that loan. And at the point when it's time to return my money, if the growth of the business hasn't gotten to the stage where you can refund based on your calculations of how the refund work, suddenly I can now say, okay, we have the agreement. The agreement says, for this money, I can now get equity in your business. I hope that makes sense. But please feel to continue your search online to find out and learn about what a convertible note can do for you. And lastly, during the acceleration period is government incentives. And this is great. So plenty of them, especially if you're a majority Black-owned business. How many of you know about the DTI's Black Schemes program? Go out and learn about it and find out about how our government is looking to incentivize you to grow your business. As we move further into the growth of your business between 2 to 5 years, now we're talking about scaling up. This time when you now can start having conversations with venture capitalists. This is a time now you can leverage even tools like the convertible. This is a time when you start speaking to your strategic corporate partners. So you've grown your business. You've now gotten to a stage where you now have a client. That corporate client has got far greater access in their balance sheet than you absolutely do. So why not leverage that opportunity with that corporate client? Why not take the opportunity to say, you're my main client. How can I bring you into my business to help me grow my business so that I can service companies similar to you as we grow the business? And then as you move forward, you move towards a period of growth. This is where now you're doing really, really exponential. And one of the defining elements of that growth is now you found product and market fit. Your systems are working. Your customers are buying. Your bank balance is growing. Now you're looking for new opportunities to new market development. This is when you start thinking about maybe there's an opportunity beyond just Gauteng. Maybe the opportunity is Cape. Maybe there's an opportunity beyond just Gauteng. There are 6 countries in and around Gauteng province. There are multiple opportunities to drive growth into the continent and to Europe, like the United States, like Southeast Asia. Again, this is the opportunity now to rethink what kind of money do I need to accelerate my growth. This is where venture capital comes in, private equity, the banks. Okay, our banks are responsible for 64% of all this funding in South Africa, small business funding. 64% of all small business funding is done through the banks. The banks are a critical, the government incentives, and this time international DFIs. Again, many governments across the world are bringing into Africa because they're moving away from charity and from aid and moving towards economic enablement, moving towards economic trade and economic policy. So again, there's a lot of international DFIs that are looking for companies that are looking forward to accelerating their growth. And the rest of the time, you've got exits, you've got mergers and acquisitions, and you've got IPOs, which stand for initial public offering. This will be a workshop on its own, and which you can have in future as we grow the Khula Growth Club. How to raise capital. Again, you have different segments and sections. As I've said earlier, please, if you are watching this on your phone, on Facebook, or you're watching this on YouTube, take a screenshot. The information is now yours. The knowledge is now yours to own. And this is kind of quick crib notes. So again, in the early stages, we spoke about how many people can give you a little tiny loan. So again, from as little as 15,000 all the way to 450,000. Okay. In the acceleration stages, you can really accelerate the growth of your business from 450,000 all the way to 5 million. And in the growth stages, you really need serious money now. And pardon me, let me add that the 5 million plus is also very dependent on the industry you're going into. But the base knowledge that you're gaining now is the same across the board. So please remember that this is just a framework. Depending on the industry you're in, you will need different sets of money and different sets of funding. In terms of the tools you're going to need with each individual area of funding, we talk about a concept note. Most people who are angel investors or your friends and family, okay, they know they trust, they can build trust pretty quickly. If you're a trustworthy person, all you need to do is give them a concept note to say, this is the concept that I want to work on. This is this is where we're going to begin to start building this concept. If again you are a young kind of early stage startup company, you can look for something called the business model canvas, the BMC, the business model canvas. It's a framework that simplifies the things you need in a very simplistic format. It's not a business plan, people. It's a simplified approach to raising capital from other people. Hopefully this makes sense for you. Okay. If you're in the manufacturing space, it's very important to also now have a product spec, because to get someone interested in product, you need to define what's in the product. Okay. The scientific component or the input component, the product itself in terms of what goes into it. So giving someone access to a product spec also helps them understand what it is that you're offering. Again, if you're doing a professional investor, it's always good to have an investor deck. Okay. It's always very important to kind of think about some of these things. If you're entering a competition, there's always an application form. But again, I love competitions. I judge and I sit and adjudicate in many competitions all across the world. But the one thing I know is that you can't build a successful business just on the back of an application form. This is why personally I've never been a fan to our government's process or program for initiatives like the Gazelles program. Again, because I don't believe that you can actually, through a form, get to identify the most talented people in businesses. That's why I also have never supported the Black Industrialist Initiative, because none of these things to me make sense on an application form. The best thing that you can do is identify the most talented people in our country and then support them as they continue to build their businesses. This is my advice to our government. So if you have access, remind them of this advice. In terms of the time period it absolutely takes to build one of these presentations of these decks, you should be spending at least a week up to 3 months in preparation in the early stages. If you meet Vu in the streets, you can't say to Vu, let me go and bring you something, a piece of paper in 2 days. There's no ways that's going to work. Spend the time. You will value and cherish the investment that you make in building and preparing for this. And shortly, I'll be talking about your data room and how you can prepare this thing. What are you preparing? You're preparing a number of things. You're preparing your concept note. You're preparing your product spec. You're preparing a promissory note. Okay? That promissory note is not too dissimilar to what you have as part of a credit note. Okay? So again, a convertible note or promissory note, these are all kind of playing the same thing. They kind of similarly are these very favorable loans that any individual can issue you in lieu or in return for equity in your company. What are you preparing? You're preparing for a prize if you're entering a competition. Again, there's no greater opportunity that besides the competition form, you attach your own concept note, and you attach your own product spec. Part of this process is really about this. What is the core component, what you need to focus on? At the early stages of your company, the key important thing you need to focus on is the potential of your business. Okay? It is your vision. It is your theory of change. It is your evolution of what you believe the world is going to do for you to be successful and align that product, the product and customer fit. Okay? Not every product coming into the market needs to be new. You can literally, the way you sell a product. When Facebook started by Mark Zuckerberg, it was not the first social media platform there was. Okay? Many of those ones are no longer there, but you still have Facebook today. So again, in the way you build a business can be unique in itself. The way you target your customer can be unique in itself. Let's quickly move on to acceleration. In acceleration, you have something called a proof of concept. And this is the idea that, again, you can either take to market with a partner, take to market with a customer, take to market with a funder. So again, you want to test the market, get an idea what the market says, come back and then readjust. And remember, in the early stages of the company, you're looking both for the product market fit, but you also, most importantly, you're looking for a scalable, repeatable business model. Scalable, repeatable business model. Again, you need to prepare this proof of concept this way. Once again, we see the product spec, we see the investor deck, but this time we see a business plan. Okay. The reason why we see a business plan is because the type of funding you need is getting more and more complicated. With the complexity of the funding you need to unpack a blueprint of what you're going to build the business towards. This is where now you're also talking to the banks, and banks send you a form. That form is structured in a business plan format, but you're also submitting your formalized business plan. My advice is it's okay to have someone build you a business plan. So a professional person build your business plan, but be involved in the development of your business plan. Do not allow someone to build a business plan that you don't have a say in or you can't adjust. They must just be there to give you the structure, just to give you the modeling. But then again, why are you spending time building a business plan when you haven't built a business? But we'll get into that some other time. The time that it should take you to prepare these documents should be between 3 and 6 months to prepare. If you think you're going to do this in a day, or you think you're going to do this in an hour, or if you think you're going to do this in a week, then again, you're not being serious about building a business. These things take time. And again, while you're preparing and you're collecting all this information, you are still engaging and asking your customers, and you're still selling your product, and you're still building your understanding around what is the business model is, how do you scale and repeat that business model, and how do you get your customers and your product to be aligned. So again, you're figuring out these things. Some of the key legal documents that you need is a term sheet, which typically will go to early stage investors. Or if it's a bank loan, you need some form of collateral. If it's a loan from business partners, you need some kind of form of collateral. And the key focus of your business plan at this stage is traction. You're focusing on traction and how that traction is going to help you build your business. Let me quickly pivot towards growth. At growth, again, you've got the proof of concept, but this time you've got a strategy document. So again, what is your strategy document? Your business is running, your customers are there, everything is churning well, but now you need to kind of create a new feature, a new component, and explore a new market of customers. Now, suddenly, you can now conceptualize a strategy document along with market insights based on research that you do. This together will help you bring new investors into your company. And I've seen many entrepreneurs make the mistake of trying to take money from their balance sheet and then invest it into a new product or a new feature in their product. For me, this is a mistake. This is a very, 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 very big mistake. What I strongly advise is that you of bringing new money to grow new avenues of growth in your business. And this you can achieve through strategy docs, to market insight, and through research. But good luck with any of these things. The time that you need to prepare for this, again, depending on the size or amount of investment that you're looking to get, you need between 3 and 18 months to prepare. Yes, 3 to 18 months to prepare. Why is this important to understand? It's because, again, I come across many entrepreneurs who want to raise 100 million rand, but they spend hardly a week trying to prepare the process, the document, the complexity of documents that's required. Yes, your idea might be great, the growth of weight might be good, but you need a certain level of preparation. It's like basically winning the Olympics, guys. Okay, you don't win the 100 meters at the Olympics by jogging, for a week. Okay, you spend 4 years in full preparation to peak in that 10-second period, and this is what running a business is about. Okay, when you want to raise money, you have to have a professional way of preparing so that you are game ready, so that when that opportunity comes, it's very easy for you to receive. And some of the terms that potentially come at the growth stage include things like IPOs. This time you are focusing on exit. This time you are focusing on return on investment. At this time you are focusing on market development and growth. So again, I've come across many companies who again have seen the opportunity to expand their growth of their business. And how do they do it? They write a strategy document that focuses on their growth. So again, a company wants to grow from South Africa to Kenya. Okay, it's a whole new business. It's a whole new approach. It's a whole new focus. What you do is you now align your strategy document to say, I want to grow my business in Kenya, but I'm now going to need a whole new fresh investment to drive that growth in that new market. So again, you have the opportunity in which to showcase this, really prepare and document how you're going to extend that growth of market, how you're going to drive people in that market, how you're going to get the product mix, find the right customers, drive the marketing with a whole new set of money to do that. So in terms of what the investors themselves are looking for, okay, so again, here are some tips for you that can help you structure and think about what investors are looking for. The first thing I'm going to advise you to do is there is not one investor I know anywhere in the world who's not looking for a good, solid leader or a good, solid leadership team to drive the investment. Okay, this includes if you are a single founder or a group of founders. They're looking for people who are prepared. How prepared are you as a founder? And remember some of the advice we gave you before about the amount of time it takes to prepare for these things. So how prepared are you to receive the money that you are looking for? Again, I also come across a lot of people who expect to just raise money with no preparation. Can we please stop this? Go and prepare, because money, I think many people in difficult times understand, requires preparation. It requires professionalism. What also a lot of investors respect is the ability to grow traction. This is your growth, your movement. So getting closer and closer to that product market fit, this is what traction can be defined as. And again, most importantly, your ability to execute. So they're looking for a leadership context that again drives execution, that drives strategy, that drives professionalism, that drives preparation. All these things make for a good founder. Even if the idea itself doesn't work, what most investors are able to do is that they know that if you're a good leader, they can always grow with you in your next idea. Your next idea might be the one that really takes them forward, but there's no substitute for good quality leadership. Okay. What else are investors looking for? Investors are also looking for innovation. Innovation can be defined in different ways. It can be defined by a vertical, in as far as what industry are you innovating? What industry are you participating? What industry are you ultimately disrupting? It can be your concept. Okay, how innovative is your concept? It could be if you are in a social enterprise, it could be your theory of change. Again, I know whenever people listen to us do these presentations, they make the very silly assumption that if you're in a social enterprise, you don't need to be innovative. You don't need to be all these things that we've discussed. Absolutely wrong. The fastest growing and best social impact innovations in the world have the best theory of change, along with everything else that you see in the screen in front of you now. Investors are looking for talent. They're looking for great, amazing teams. They're looking for good experience. Okay. good, experienced people who are running good, solid businesses, who are driving strong innovation. This is what the investors are looking for. One of the very important pieces of advice I can leave you this evening as well is to think about, who do you bring on as your advisors? Who is on your advisory committee? And that advisory committee can have in it experience as well. So again, the advisory committee is a very important committee to have in your business. Investors are also looking for your passion. And most interestingly, in difficult times, they're looking at your ability to adapt, your adaptability as a business. How agile are you and your team during these difficult times, so that you're not rigid and fixed and trying to kind of, always one-sided. What is your context of fluidity around how you see the change either in your customers, in your market, or in your fundraising or your financing? Business, again, investors are also looking at business model. So remember what we said earlier, that during the startup phase, you're looking for a repeatable and scalable business model. So again, what is that business model is? How is it that you sell your product to the market? They're trying to see what is your reach, what is your total addressable market, the TAM, the total addressable market. What is your scalability? Repeatable, scalable. What is your scalability? How are your finances being forecast? What are you thinking about your sales and your numbers in terms of how you're going to grow? How are you thinking about your risk? Okay, how are you going to protect their investment in difficult times, in difficult markets, with difficult customer bases? So how are you looking at risk? How are you understanding risk, and how are you mitigating against risk? The other very important thing that investors are looking at is fit. Like I said earlier, far too many young people out there are trying to raise money. They haven't even thought about, is this the right investor for me? Okay. Investors, as much as investors can do a due diligence on you as an entrepreneur, you can do a due diligence on them. And it's very important that you, again, find the right fit in the industry, in the mandates. Again, most venture capital funds operate on a mandate. They have something called limited partners, and along with those limited partners, they conceptualize an investment thesis. That thesis defines their mandate for investment. They're looking at the culture between your company and their company. Is there a right fit? Can we work together? Are we the right kind of medley? They're looking at likability. Are you a likable professional leader? Okay. They're not trying to, 4 to 5 years is a long time to be working with someone who's not a nice person. Okay. 5 to 9 years is an even harder proposition to ask someone to work with someone who's not a nice person. So how likable are you? They're looking at the instrument. The instrument is, what kind of funding are you looking for? Are you looking for equity-led funding? Are you looking at debt-led funding? All these are opportunities and processes that you need to kind of understand. They're also looking at timing. Okay, timing. The pandemic period, the public health pandemic period that we have, which is linked to an economic crisis, is a very interesting context around timing. Is this a good time to invest in new ideas? Is this not a good time? Is your industry going to grow? Is your industry dying? So again, if you're an investor who invested into a restaurant in January, okay, you are crying right now because that restaurant has no ability to make money because of government regulation. So again, these are the things that investors are looking into. But most importantly, now, why are investors looking at these things? Why are they looking at these things? They look for a return on their investment. Okay. Always remember, investors themselves have a job to do. They themselves are entrepreneurs, because in order for them to be successful in raising rounds and rounds of funding, they need to return their money that they take from other people as a return on their investment. So what they're looking for here is, what stage of business are they investing in, and why are they investing in? What's the future? What's the horizon? I mean, again, if you ask someone what do they want to be in 5 years, it might be difficult after this COVID period. But investors try to look as far ahead as they can, because remember what I said earlier, they're looking to invest in you between 4 and 9 years. So they need to see whether or not they can align with that horizon of the future. Do they believe principally that your business is going to really thrive over that period of time? And again, remember, no two investors is right for every entrepreneur. So some people will agree with you, some people will disagree with you. it's based on how they see the world and everything. So again, part of it, of the return on investment is also the exit. And again, they're looking at the time in the market. So again, what is likely to change, impact, and affect the return on investment for them? They're looking at the time. I'm going to quickly now go through for you the preparation for a data room. Like I said earlier, if you are looking to raise money, and if it doesn't matter if it's from the bank, it's from a private investor, or it's from a venture capitalist, the most important thing that you're going to do, in fact, the thing I'm asking you to do, it doesn't matter when you see this video, if it's you're seeing it today or you're seeing it in future, the one thing immediately you must go and start doing immediately you've seen this video is start preparing your data room. This data room is something that you can use to give to a banker. This data room is something that you can use to give to a private investor. This data room is something you can use to give to a government tender office. It's a tender. This data room is something you can use to give to a venture capitalist. In the early stages, you need to prepare up to 6 months before you start looking for money. Please, guys, do your homework. 6 months, if you're in the early stages, 6 months before you start looking for money, start collating and documenting your process. Again, regardless of industry, you're going to need your compliance documents, you're going to need your certifications. If you have protected intellectual property, okay, if you have protected intellectual property, you're going to need that certificate. If it's pending or approved, you're going to need that intellectual property certificate in your data room. If someone's investing in something that's unique and that's got unique IP, it's not enough that they take your word for it. They must see it in writing, okay? They must absolutely see it in writing. If you've got an SABS tested product, they want to see that certification. They want to see that in writing. On a governance front, they want to see the legal status, your company registration, your CIPC. They want to see, again, if you've got an advisory, they want to see CVs. They want to see the people that are working with you. Again, if you've got, if you've linked your financial statements, they want to see your financial statements. They want to see your forecasts. And remember, you've got companies like Tax that can help you with this. So again, you can speak to the team at SM Tax Startup Services who can help you build your forecast and your financial modeling. So again, remember this as well. In terms of your early stages, again, you need to your investor deck, your product deck, all of these documents must be there in that particular data room. And there's something called the capitalization table, which is called the CAPE table. This is basically a table, a spreadsheet that tracks who owns what in your business. Okay, it's obviously very easy when you own 100% of your business, but some people obviously through time give equity or sell equity or get investors to come in or exchange equity in their businesses for the equity. So you absolutely have to track who owns what. It doesn't matter if it's 0.5% of the business. It doesn't matter if it's 2% of the, it doesn't matter if it's 10% of the business. Everybody who owns something in that business has to be included in your capitalization table. Okay, and across the other stages of preparation, you can look to preparation during the raise. One of the things we must, especially when you're looking for private money, is a due diligence. You can get a due diligence. This can be both legal. It can be a due diligence on your if you've got a technology business. It could be a due diligence on your finance and a general kind of audit on your finances. It could be a due diligence on your CVs and security checks on your CVs in terms of your qualifications and things like that. One of the always advocate for when you've got a business and you've got people who support you, you've got advisors, you've got investors, is be prepared to submit monthly reports. Okay, and these monthly reports, if you collect them, absolutely easier for you to raise money in future, because someone can look at those monthly reports and can track your progress over time. So remember those monthly reports, guys. And the last thing is that, again, be prepared here for due diligence process that will be governed through a term sheet. In the term sheet, most investors will say, we are agreeing to make this investment, okay, pending a successful due diligence. They say, we are investing the money, We have the million. We're happy to sign a contract, but we reserve the right to go and look at your books, to go and look at your tech, to go and look at your legal. If we are not satisfied that what you've told us doesn't align to what is there, walk away from the deal. So the best thing that you can do is prepare. Okay. Now, once you've raised the money, okay, the minute you've raised the money, what's interesting is that you now, again, I know many young entrepreneurs who've money before. Doesn't matter how small the money. Please, if you've raised the money, be prepared to submit monthly reports to your investors. That money is not yours. It belongs to the business. That money is not yours to your lifestyle for. It's there to grow your business. You need to be accountable to reporting to how that money is used. The minute you receive that money, start thinking about instilling controls and cash flow management processes into your system. Okay? Remember, advice, I'm going to go through some of the advice that Hyper gives, but most businesses tend to run out of money because they're not watching cash flow. They don't have controls that mitigate cash flow losses and cash flow fluctuations. So again, raising money is a very calculated process, and we'll tell you how you go about achieving that. And again, once you've raised the money, be prepared to do quarterly reports, be prepared to do quarterly board meetings, be prepared to do strategic meetings with your advisors. As Haba, regardless of the startup, regardless of what industry you're in, always need to be ready to raise investment. So always be ready to raise investment and working capital. Whether you're raising that money for expansion or for operations, the reason why you have a data room is that you are just on the right side of ready. You need to be on the right side of always being ready to raise money. As Hyper, we also recommend that you watch your operational costs and your OPEX, okay? And this is where cash flow is important. If you can see you're running out of money fast and there's changes in the industry, you need to be raising your money at least 6 to 18 months. Guys, don't wait until you have 1 month worth of money to start running around making your problems everybody. If you're a responsible leader, 6 to 18 months before you need that money, start thinking about that money. Okay? So regardless of which stage of growth you are in, regardless of the market conditions that you find yourself. And then the last tip, remember to password protect your folder for that drive so that you can track who accesses it. Okay? You want to track who accesses that particular drive. So password protect that drive so that you know as you give different people access to it, you can either change the password or you can either limit who's got access to that particular data room. But always have a data room, especially after this session. I want to quickly recap for you the types of funding that we have available. So again, so that you remember. So what have we spoken about? We've spoken about family and friends. We've spoken about equity crowdfunding. We can also speak to 12J VCC. This is a SARS tax incentive initiative by SARS in South Africa. It's a 12J VCC. Again, go and look it up. Go and study it online. There's over 100 these venture capital funds that are there intentionally looking for tax incentive from SARS to invest in early stage risk-based companies. Okay, there's many rules to 12J. There's a lot of content on it available online. If you're a good, innovative, high-risk business in a different industry, this is a wonderful opportunity for you to connect. And the fun thing about the SARS website is that it lists every single one of those 12J funds. Every single 12J fund is on the SARS website with their email address. So you can reach out to them and pitch them on your business. Earlier on, we spoke about micro venture. This is, again, the size of the check that gets signed, especially in the early stages of a company. It's normally, there are funds and firms that do micro venture directly, but you also have professional business angels that also do independent business angels investment for you. We also spoke about development finance. So the DFIs, development funding institutions. They're typically looking for high value, high impact companies, but they're also looking for economic impact on in terms of the country or diplomacy if it's international organizations. We spoke very briefly about banking finance. We spoke about debt. This is what you know, your credit cards, your revolving loans, your home loan, your bond. Your bond can also finance your business. Again, we can talk about mezzanine, which again is a blended kind of middle range bit of finance. We can also talk about asset-based financing from the banks. Like I said, the banks fund about 64% of all small business funding in South Africa is done via the banks. The banks are great. They offer you credit cards. They offer you loans. They offer you revolving loans. They offer you simple and complicated banking tools. Again, take the time to learn what offering your bank has for you and your business. We spoke very briefly about venture capital, which comes in the form of accelerators, where again, when it comes to venture capital, you know you're going to give away equity. This is to the accelerators, these to the venture capitalists or corporate venture capital. There's different kind of models. And then for the super ambitious amongst you, we spoke about listings. We spoke about initial public offerings. This is through the exchanges like ZARX or the JSE or the Altex. So again, really big dreams to get to that point. A lot of compliance, a lot of detail, a lot of preparation, a lot of leadership, a lot of execution involved in that process. For those of you in the blockchain space, you know about the initial coin offering. These are IPOs, but for the blockchain, using currencies like Bitcoin or Ethereum. So again, these are very kind of, again, they built on the theory of change and a business case that it can be accelerated, but invested in or supported by a coin offering. So again, when you issue those out. Here's some tips around resources. We couldn't leave you without having resources. Once again, please take a screenshot of this. This is just a unique opportunity to help you have access to this kind of funding. There's wonderful organizations out there that are there to support if you're looking to raise capital. Organizations like the South African Venture Capital Association, SAVCA. Again, a great platform, great resources that are available on SAVCA for any small business looking to raise money from different types of investors, whether they're in venture capital or they're in private equity. Go check out the South African Venture Capital Association. And not only do they invest in companies in South Africa, they can look at investment opportunities in the rest of the continent as well. Organizations like Silicon Cape and Simodisa, again, provide great resource tools for you to learn and understand who in the market is, again, providing capital and funding. From a crowdfunding point of view, I'm very fortunate to be part of a wonderful organization called Uprise.Africa. So again, check us out, Uprise.Africa, where again, you can see on Uprise.Africa the opportunity to get equity-based crowdfunding. Equity-based crowdfunding. But if you want to learn about all the different crowdfunding platforms that are available all across the continent, there's the African Crowdfunding Association, the ACFA. So again, look for the African Crowdfunding Association, and you'll have plenty of different types of crowdfunding platforms that are out there offering the opportunity for crowdfunding. From a development finance point of view, we have organizations like CIFA. CIFA has got offices in every province across South Africa. Please reach out to CIFA. They're looking to support small businesses and fund small businesses. You've got the IDC, the NEF, the National Empowerment Fund, the Industrial Development Corporation, the Small Enterprise Finance Agency, the National Youth Development Agency, NYDA. So these are all organizations that are there predominantly in South Africa to support those of you in South Africa. From a bank finance point of view, again, go to the Banking Association of South Africa. The Banking Association of South Africa has got all its members, all the major banks who are license holders in this country, all the information in the Banking Association of South Africa. But I'm very fortunate to work with a major bank at ABSA. So that's why you see the ABSA logo there. We do a lot of work with ABSA, and I love working with ABSA. FNB, Sasfin, Nedbank, Investec. You know the banks. Go out and find them. Go talk to them. If you want to understand venture capital, like I said, SARS has got a very beautiful platform. as an incentive platform that offers you the entire list of venture capital funders. It's called the 12J VCC. You can download the list. It's there with all the email addresses. So go over to the SARS website and look for 12J VCC and you'll see the entire list. But some of my friends in this industry are people like Knife Capital, Kalon Ventures, and the SA SME Fund. These are all credible, solid venture capital financiers. If you're looking for other options, so again, there's other options of raising funding. There's something called the People's Fund, which provides invoice funding. So again, invoice discounting or invoice spend. And again, they do this along with other companies like Pollen Ventures, like Spartan, like business partners. So again, if you've got an invoice, you've got a tender, you've got a purchase order that you're trying to fund, these are the organizations that you want to talk to and see which one of them offers the best option for you to drive your funding. In terms of COVID resources, please, once again, feel free to take a screenshot. We're still kind of getting to the latter part of COVID, like I've mentioned earlier. I believe that we'll really be on the other side of COVID in early October, which is a good thing because November is Global Entrepreneurship Month and we want to be excited to support small business. But again, if you're looking for some resources that still speak to how you can get assistance during this COVID period, there's plenty of resources out there. But the one I'm going to speak about is SM Tax. SM Tax has created a platform where you can again sign yourself up. It's /COVID-19-19. And on that platform, you have a whole bunch of information. In fact, these Khula Growth Club sessions were built on the back of this channel that SM Tax has created. So please go out and look for that information. And with that, I want to, again, have a look at what questions I might have or what feedback I might have in terms of commentary. But again, please feel free to send us an email, webinars@smtax.co.za. Look out for many more sessions. We've got the Business Women Association Women's Month workshops happening next week. So again, if you go to womensmonth.co.za, and again, you can sign up for the Tax for SMEs workshop that the CEO of SM Tax, who's got a master's in tax, again, will help you through with some of your tax challenges in your business. So look out for that. Our next Khula Growth Club session is happening right here on Facebook and YouTube on the 27th of August. And with that session, we'll be hosting Lerato Dondashe, who is the founder of Thrive Network, and we'll be talking all things branding and marketing. So a very exciting session to look forward to again. So hopefully we're now back. Bongi, what did you think?
I thought that was fantastic, Vu. Really incredible insights. I'm very excited for the month. It being Women's Month, I'm obviously a little bit biased. And you gave really, really beautiful advice around, being prepared, being investment ready. And it's never a crime to be ready. Always be ready because you don't know when that investment opportunity is going to come. And I myself come from the development finance space. I'm a chartered development finance analyst by profession. And so really understood what you were saying about development finance institutions and the different instruments that are there, Vu. So yeah, I had a great time and I'm sure everybody that's joined in has had a wonderful time.
So I trust everybody has enjoyed the session. And again, we'll be back to join us. I know these videos, we do them live, but they get a lot of traction after the session. So hopefully we'll have, again, like the other sessions we've done, thousands of you watching and taking on board the information we've shared. And with that, I want to thank everybody. I want to thank the team from DPK for the production. I want to thank Bongi. Bongi, I want to thank you for the support at SM Tax and everything you do for your clients. And I want to thank my team at Hyper for the support as well. So thank you very much, everybody. We look forward to seeing you on the 27th. And with that, enjoy your evening and thank you and good night.
Thank you.